Hey guys, welcome back. In today's video, we are talking about the AMC increase by 70%, the squeeze without warning, the merger rumors, and many more in this video. First, we're taking a look at this. Who says movie theaters are dead? Amazon sees the high value of theatrical distribution. So recently, we've seen Project Hail Mary, and it has done exceptionally well. What we have is it allowed AMC to post its second highest weekend of the year for admissions revenue in the US and globally. So this is exactly what we want to see for AMC. When you talk about fundamentals, when you talk about how box office has a direct effect on these things, this is what we're looking at. And it's why we've said the more movies and more importantly, the more better movies that we see that are coming out, the more AMC is going to profit from this. And remember, one of the things we've mentioned is talking about the efficiency of AMC. And what we will see right now is that this allowed the admission revenue to be 70% higher than the same weekend in 2025. Now, obviously, there are factors that you have to look out for. Firstly, it was that last time we didn't have a movie like Project Hail Mary. So this is a big reason. But one of the key takeaways that I do want to talk about is about going back to the point we made earlier about efficiency, about how even with the same box office, every quarter we are able to actually make more money, or at least better on this year on year, we are able to make more money. And so to see that we are seeing the revenue go up, to see that we're seeing the admissions go up, this is something that is exactly what we have been waiting for, what we have been talking about, and we are seeing it happen right now. You can see Q1 box office with 9 days to go now tops 1.55 billion thanks to numbers from Project Hail Mary. 80.5 million domestic opening, and Q1's second highest to date total weekend box office of 138.6 million. We can see Q1 looking to close around 1.7 billion. And this is very, very good. Like I said, we are looking at data of whether or not the box office is recovering and whether the box office is improving and getting even bigger. And with what we're looking at right now, it sure looks like it's getting bigger. It sure looks like this is something that we have been waiting for. And when we take a look at kind of the cumulative growth throughout the last few years of Q1, you can see that we are seeing improvements. We are seeing the numbers still fluctuate up and down. Bear in mind, we're seeing less releases. Our averages has been higher than 2025, 2024. We're still waiting it to be even bigger, but so far we're doing well. One of the biggest key takeaways is about understanding that right now, even though you can see there's a difference between the box office of 2026 to 2023, which we're still to see end, but even if we were to use this number right now, you have to remember we are in a better position now. We are actually able to make more profit at this point than we were back in 2023, even though our box office is lower. Not to mention, it feels like going into the end of 2026, the box office is only going to get bigger. You can see currently we are 100 million plus over last year's Q1, 52 million away from the second biggest Q1 post-COVID, 150 million away from 1.7 billion Q1. And these are some of the numbers. And like we've said, AMC doesn't need the box office to get bigger. AMC, even if the box office remains the same, is actually able to make more money than previous years. But to see it actually get bigger, to see that we are able to become even more efficient and actually be able to make more money, that's exactly what we want. And that is actually what we're seeing AMC delivering to us. Also, one of the biggest things that we have talked about, and ultimately understand why AMC is able to profit off this, why AMC is the biggest in the industry, and why it's actually going to grab a lot of future shares, is that the CEO of AMC knew that people wanted a premium large format, so he took a big risk and started the AMC Go plan to invest in the world-leading technology for the movie-going experience so more people will get to see the movies the way they were intended. Now, this is going back to a post we saw all the way back in 2024, and actually it was even mentioned before this, which was the AMC Go plan, where they aim to increase their premium large format and their extra large format. Now, essentially for people who don't understand or who don't know, what AMC found out was that they found data of people starting to go to movie theaters that were more premium, and they saw a correlation in the data. And so what they did was that they wanted to invest heavily into creating more premium theaters because they knew that was going to be what the future demand was. Now, fast forward to where we are right now, they have obviously got into the premium theaters, And they were proved right. Exactly the consumers wanted was premium or is premium theaters, and so they've already put themselves in the right position. And this is how we always knew that AMC was going to grow and put themselves in the best position possible. Now, all of this has been good news for us. And so when it's good news for us, for the apes, it's obviously bad news for the short. And that's why we're seeing the manipulation once again. 23 million trades in 2 cent range. Now, this is just a crazy showcase of the high frequency trading. And once again, it's just showing the manipulation. We know that HFTs are used to manipulate the price. And that's what we've witnessed for AMC. That's what we're looking at for AMC. The fact we're seeing 23 million in the 2 cent range, this is obviously very, very crazy. Webull shows us a very interesting piece of data, which is that it shows 71% hold, 14% sell, and 14% strong buy. Now, this is what is interesting because firstly, we know that the majority of the people are holding. This is something we've known for a very long time now. So already it should showcase is that if 71% of the investor base is willing to hold, then the price should not be declining the way AMC is right now. Furthermore, is the fact that we are looking at a 14% sell versus a 14% strong buy. And already you should understand that the imbalance isn't there already. And what we are looking at is just the manipulation, is just the suppression. It's how we understand that firstly, apes are willing to hold onto their shares. And not only that, are willing to buy more AMC. Is why we see 23 million trades going through for AMC at 2 cent range is because of exactly that, what's happening right now. And we have to understand that it's very easy for us to beat these short sellers, and we have beaten these short sellers. It's why we're seeing them struggle, because when you take a look at here, 3 million apes only need 176 shares to each own the float. 500,000 apes only need 1,000 shares to own the float. Now, what we are seeing is, firstly, we have seen already how many apes who own, 1,000 plus, 10,000 plus. Bear in mind, each of us only need to own 176 shares. At the current price of $1 or near $1, 176 shares, it's only 176 bucks. Now, this is something that we are talking about for a very long time. It's something that we've seen within the community, is how many people have bought. And not only that, it's how many shares they have bought. And so we own the float so many times over. This is something that is without a debate right now. But what's more important is about understanding that the real shares, and it's why we've always focused on holding, is because the people who have been, the apes who have been with us from the very start, the apes who have bought it at the very beginning, the ones who hold the real shares, remember, they are priceless. And it's why we've always see the constant need for these short sellers to create these articles, to try and create these incentives for people to sell, to get people to sell, because they realize that the original apes, the apes who owns the real shares, and most of the times, the ones who owns the real shares have bought even more shares now, but it's because the short sellers want those shares. They are priceless. Now, this isn't to say that synthetic shares are useless, because when they have to cover, they still have to cover the synthetic shares. But we've talked about in the past before how they've used real shares to then rehypothecate it many times. And that's ultimately what they want. They want the real shares because then they can show it in the books, and not right now by trying to hide all of these, synthetic shares offshore. And this is the power that we have. Another big thing, AMC will squeeze without warning. No TA, no chart BS, no reasoning. It will just go off simply because shorts will be forced to cover their speculative high risk trades first. There will be no news. No one will say, well done, you were right. We are in the end game now. Now, I agree with this statement because this is why we've always said there is never a date for when the squeeze will happen, because this will happen all of a sudden. Just like no one knew about 08, no one knew about during the lockdown when the whole stocks was going to drop. This will just be a sudden thing. When someone collapses, it will all just begin collapsing. And what we're seeing right now is how these dominoes are already falling. Like I said, there is no date that we can gather from this. But when that first firm goes off, and this could happen at any time, potentially the people who know this will be the top insiders. But when that first firm drops and it creates this domino effect, that's when we'll see the squeeze happening. And we won't get warned about this because they will try and hide them, but they won't be able to hide the synthetic shares that they have to cover. Another thing is looking at the target. You can see AMC just over 129 seems to be full send. After that, 662, then 35, and an overshoot to 200. So, this is what we've said with AMC. You're looking at the technical analysis. Now, once again, technical analysis is not something we use a lot on this channel, purely because AMC is manipulated too much. I personally am a big fan of TA because I do it for my trading, but I know when it comes to AMC that is not the case. And what we can use it for is to understand the sentiment, to see somewhat engage an understanding of what's going on in the market, and that's what we can obviously see. Moving over to quickly taking a look at GME, you can see is that firstly, just like how AMC has been crushing it, so has GME. You can see over the past 2 years, Ryan Cohen has transformed GameStop from losing millions per quarter to making millions per quarter while amassing a war chest of 8 billion plus cash. Now, this is obviously very good. And this 8 billion plus cash is very important because recently, GME has obviously talked about rumors, or rather acquisitions. It's something we've been talking about for a very long time. We've yet to see a confirmation, and we're just seeing rumors thrown around. Here is another rumor. Now, this is, again, I want to highlight a rumor. Nothing has been confirmed, but apparently they're talking to kohrs. Now, take this how you will. Perhaps this would be confirmed later on if it were to be true, but we are seeing a potential here. And just like we've said with anything else, as long as GME is making the right decisions, an acquisition is something that's going to be extremely powerful for GME. Now, today has been a wild day. So we've seen how AMC is doing well. We see how AMC is thriving, the same with GME. But for the rest of the market, it has been extremely, extremely volatile. Firstly, the 20-year note yield is now above 5%. Now, this is already something that is extremely crazy, but what we then are seeing is the Bank of Japan, who wants to dump 600.8 billion yen onto the market. And then what we saw was in 3 hours, how gold and silver erased a combined of minus 2 trillion in market cap. Bear in mind, this is everything that has happened just today, the Monday. We can see gold prices fall below 4,300, 4,350, down over minus 5% since futures open, with 1.5 trillion gone in 3 hours. The same for silver as well. Now, what they don't say about all of these is, of course, the physical silver that is leaving the fold, the physical silver that is still in demand. But when we talk about purely based on market and the market value, what we're seeing is, of course, $2 trillion. It doesn't stop there. Then what we saw was this massive candle on SPY. Now, I myself am a futures trader as well, and I saw the NQ go up 790 points in 5 minutes. That is something that needs to be talked about, because that happened at the very same time, and it's precisely because of this of why it happened. You can see the oil prices collapses below $84 barrel after President Trump says the US and Iran have had productive talks. So you can see this massive drop in oil. This was the very same time NQ went up 790 points in 5 minutes candle. But then you look at exactly everything that's been summed up today. What we saw was 7:04 a.m. ET. President Trump said the US and Iran have had productive discussions. S&P surged 240 points and plus $2 trillion in market cap. 27 minutes later, Iran completely denied all of the claims, and by 8 a.m., S&P had fallen 120 points, erasing $1 trillion in market cap. We saw a $3 trillion swing in 56 minutes. And this is just talking about the S&P 500 market cap, because what we just obviously said is the fact that gold dropped 1.5, gold and silver raised $2 trillion. This is all happening today. Is why this whole thing is crazy. And then at market open, we saw 900 billion added to the US market. We saw 265 million worth of crypto shorts being liquidated because of the comment that was just made, what we talked about earlier. This was after yesterday's of 200 million worth of crypto longs being liquidated. So in 2 different days, we saw 200 million worth of shorts liquidated and 200 million worth of longs liquidated. And then we're also seeing how Wall Street is betting against their own bubble that they've built. This has all happened today. And this is just to talk about how crazy the market situation is right now and why we need to prepare ourselves. And bear in mind, we are not being affected by this per se, in the fact that because our investments are to AMC, this isn't something that has a major effect. But for the hedge fund, the market makers who are affiliating themselves in all of these markets, they are getting hurt by this volatility. And I know that they are not doing well in this because we've seen this happen in the past. It wouldn't surprise me in a few weeks we see an article talking about how the volatility that's happened, whether it's today or in these recent weeks, have cost them to lose billions of dollars. Now, as always, this is financial advice. Do take out a second or so. Make sure you do your own due diligence and research, and I'll catch you guys next time.